I think, look, when we look at tariffs and the conversation, the key, as you're talking about, is flexibility, that the president is willing to listen. He's watching the market, he's watching the reaction, and he's listening to CEOs, and he's listening to what they're telling him. And in this case, we've got some CEOs are reacting in terms of, we are going to make investments in America. And that, from a perspective of an American, is really good from us from a resiliency perspective, as well as that reshoring of jobs and helping that middle class. And then you've got on the other side the fact that these factories don't just get built overnight. And I think that there is a need to phase in some of these tariffs and phase in those measures, which I think he's going to do through that exemption mechanism.
Well, I guess there's a question of what happens in the interim when we're actually considering the health of these corporations and their financial picture. Knowing we're now in the heart of earnings season, I wonder, Katrina, how you expect the uncertainties around this policy that remain, the difference in the short and the long-term outlook, to manifest themselves in what we're hearing, not just about the results looking backward, but what kind of guidance companies are really able to provide going forward.
Look, the impact is being felt actually more in the small and the mid-cap sector. If you look at our large cap companies, they've got much more resilience in terms of the balance sheet, their ability to flex their manufacturing. So it's actually going to be in that lower end of the market that you need to focus on the comments that are coming out of them. That's the first side. The second thing is that we've got these initial announcements, but then we've had reversal of some of these announcements. We've had adjustments and everything. So I think that the commentary coming out of earnings season is going to be, we actually had a great quarter. Spending held up. And so the numbers for the backward-looking quarter are going to be okay. It's just going to be that uncertainty that relates to the forward outlook. And I think that CEOs who talk about the variables and talk about what they're looking at and what is causing that variability will be rewarded by the market.
Well, and which would you be more concerned about when we consider the different variables in the forward picture? The idea that it's not clear what the tariff rates will be, so therefore what kind of margin compression companies might be dealing with, or the idea that it's not clear what economic impact the tariffs will have and how much demand there will still be that these corporations get to be on the receiving end of? Which would you say is the greater risk here, or are they just too entwined, Katrina?
They're actually both risks to the market. The first of all, in terms of the amount of tariffs, the question is how much of that gets passed on to the consumer. The second part of this is how much of the consumer is actually doing forward buying or has been doing forward buying, like buying 2 or 3 Apple iPhones ahead of the announcements. So you could have some unevenness in terms of demand patterns, and that's something that we're watching. But if that margin pressure, if you look at corporate margins, they're at very, very strong and high levels. So I think that there's some ability of them to absorb some of those tariffs in their own margins. And that doesn't worry us because we think that companies are well positioned.
Well, and I wonder what companies you see as best positioned here, Katrina. Is it staples really that are the safest haven right now? Where else would you be recommending you seek a harbor in what has been a pretty incredible storm?
But when you talk about a staple, those staple companies are still subject to goods that have got tariffs on them. We don't make all of our produce here in America. And so they're subject to the same characteristics as before. So I think it's actually very unusual because there's so many different factors that people have got to look at that are influencing this market that haven't influenced it before. We talk about the partisanship that's really impacting the ability to trust any type of forward-looking sentiment index because you've got that dichotomy between the Republicans and the Democrats, as well as the fact that things like tariffs, we've had them in terms of industry-specific tariffs with long investigation periods, but now we've got them, they're being implemented quickly and they've been implemented in a much more broad brush manner, and that's going to impact the consumer. So it's just a different conversation, and that's what we're kind of working through and listening to companies to see how it impacts their bottom line.
Well, and then there's the kind of wider macro picture as well that is a constant conversation we're having here on Bloomberg TV and radio, Katrina, which is how this all filters into monetary policy, if at all, as the signal we're still getting from the Fed is they are in wait and see mode. It doesn't seem that they are super eager to see a Fed put come into place here of any kind. Are you anticipating that? Have you changed your expectations? And what if we are to get a signal from the Fed that they're willing to step in here, would that do to risk appetite?
It's very difficult for the Fed to step in because one of the metrics that they're watching is inflation, and they've spent a long period of time getting inflation, which was at very high levels and very far away from target, back down close to 2.6, very close to their target level. And then so that's on the Fed that's kind of looking at, we've got low unemployment numbers, we've got an inflation number that we've kind of got under control, but tariffs potentially are a headwind to that they could cause inflationary pressure. So the market, though, is pricing in 3 Fed cuts. I think we're at less than that. We do think that the Fed is going to be very cautious before they step in. I think you've talked about a Fed put. I think that President Trump is more likely to make commentary that supports the market versus the Fed.
Well, a lot of people thought we found the Trump put last week when he noted what was happening in the bond markets and issued this 90-day delay. In our final minute here, Katrina, though, obviously what happened in the bond market, as well as what we've seen in the weakness of the dollar, has kind of contributed to this, if not narrative, question as to whether we are now reconsidering U.S. exceptionalism from an equity standpoint. Do you think the end of U.S. exceptionalism is upon us?
Absolutely not. I think that the America and our resiliency and our ability to adapt is what makes this country so unique. And I don't think that anything that's happened has actually undermined that. If I take a look at the factors that support entrepreneurialism, and I look at the factors that are encouraging investment back into this country by a number of companies, Nvidia is just the latest company that's doing that on top of a TSMC. I think that the American story continues to work here.